Hello, everyone, and welcome to the Trade Ideas Live Trading Room Recap for Friday, November the 4th, November the 1st. Getting ahead of myself here. My name is Barry Anderson, moderator of your trading room. This is an email address you can use if you have any questions for me. This is a link for our free room, 100% free. You do not have to be a member of Trade Ideas to be in our free trading room. I open the room every morning at 9 o'clock Eastern Time. I go to 3 o'clock. I will stay later if there are questions, though. And in the email you're getting, you will see a link for the test drive. The test drive starts on November the 11th. So if you sign up today, you're pre-registering, so don't expect any data until November the 11th. It'll cost you $8.99, and you'll get 10 trading days for that. Now, that's assuming you start on November the 11th and you can run to November 22nd. If you can't start on November the 11th, if you start on November 12th, for instance, you'll get 9 days. But it'll be $8.99, and you'll be just as if you were a premium subscriber. You'll have access to everything that we have. It's also open to people with our standard service. You can upgrade for that week, for that 2 weeks, and test it out. And after the test drive is over, you don't have to worry. We don't put you into a subscription. When it's over, it's over. Of course, afterwards, we'll offer you a nice promo code if you do want to take out a subscription, either a new one or if you want to upgrade from standard to premium. All right. So, kind of an interesting day for me. I did two trades that I don't often do. Okay. Now, Loco.
Wow.
This is not the first one. I'll show you I'll show the other one later. But Loco was an earnings play. All right. And very typically, I do not like to take a trade in the first 15 minutes. But this came in my watch list very early, 9:35. Now, just a word about my watch list, okay? If you've been following my watch list, I'm going to make the change for Monday. So when you load it from the channel bar, you'll notice that these alerts are starting at 9:35. Your alerts may not have started till 9:40. I made a change. I wanted to see if I get the alerts just 5 minutes earlier and see if that made a big difference. Why I delayed it for 10 is I didn't want something to chop around in the first 10. Get in, get out, get in, get out. So, but during earnings season, we're seeing a lot of plays that, of course, just rip right from the open. So that's why I changed it to 9:35. Anyway, long-winded explanation for why I took the Loco. So that obviously turned out to be an excellent trade. The CRC would have been a good trade. 777 got up to 825. U.S. Steel, I think that's a little bit late. 1320. Well, actually 1324, but you would have had to hold on. Well, it got up to 1351. I don't want to go through them all. I will go through these two, the DDD and the VIAV. This is the one that really I missed. I was doing the VIAV trade at the time. I missed the 22. I did see it right here, and look what it did. It got all the way up to 2281 before it pulled back. But the Loco, but this is the other one that I did, which I rarely do. A little bit of a lag here. Pinterest had earnings, and look at the collapse. And so I decided to take this right basically at the open on a short, and it was a scalp. I admit it was a scalp, and it's recovered incredibly well. Okay, but those are two trades that I did right off the bat, and I say I don't usually do that, but I just thought with Pinterest, I mean, there's no support. This at this point, this was an all-time low. Now, a lot of people in the room, I pointed this out. This is not a classic red bar ignored right there because the bottoming tail is below the green candle there. For it to be, in the absolute definition of a red bar ignored, this is supposed to be totally engulfed by the previous green candle. And then if the next candle is green, you get a potential long signal. I happen to think though that if it's a bottoming tail and it's outside the body, that's almost better because again, let me expand that. What does this mean? This means that the sellers tried to knock it down all the way there, and then the buyers closed it there, and then they continued to take over. Now, do they all work like this? Of course not. But that's the theory behind the red bar ignored. And then, of course, the green bar ignored on the way down. Stock that's moving down, have a momentary pause, green bar, and then it continues. This is basically what we're talking about, a little pause in the uptrend. Though this wasn't, it was a bit of an uptrend. I mean, you had these two candles, but then a bit of a pause there too. But anyway, a lot of people took that one. Now, I took DDD.
Wow.
And why I was really stubborn about it, I think I got into this like 2 or 3 times.
Wow.
Small losses on each one of them. And the reason is that, again, you have to look at it on and it was from my watch list. You have to look at it on the weekly chart. So you can see, looking left, lots and lots of room. It was an earnings play on the 30th, after hours on the 30th. So it's fairly recent, okay? And get back to the 15-minute chart. The 200-day moving average was 954. So that's the first thing I was waiting for, the break. And also the VWAP, well, at one point it was 956. I noticed it's 959 now. So I could put a very tight stop on this and take. So if I'm looking, and when you saw that weekly chart, you saw how much room there was. So I can put like a 6-7 cent stop on this trade. And let's say it was a 5-cent stop. I just want to make the math easy. So if I was willing to risk $100 on the trade, I could take 2,000 shares of it. 2,000 times 5 cents is $100. And so when I look left and I see the potential, that's why I was, being stubborn on this one, seeing if it would work. It didn't have to give me like $1 on the move. It could give me 20 or 25 cents, and that would have been a really, really, 4 or 5 risk reward to risk ratio. The same with the VIAV. This one I got in 3 times. And it's the same principle. I think this one actually has absolutely take a look at it on the weekly chart.
VEDL.
Yeah, if I look left, it's got no resistance whatsoever, and it's had a great week. And so when it made it over 16, it's sort of the same thing. I thought, okay, I can take this trade over 16, can put no more than a 16 loss on it, like a whole number loss on it. I did this 3 times, and I think I lost the grand sum of 3 cents once, 7 cents another, and I can't remember the other one. But the same sort of principle, though. I can put a very tight stop, and if it works, my goodness, who knows where this could have gone? Just didn't work. And let's see what else happened. Oh, I want to talk about this AI trade here. Okay, so I'm talking about FLR, Fleur. If you were in the room yesterday, in fact, what I want to do, sorry, there's a bit of a lag when I do a video. It's a bit of a lag. Okay, so FLR was an earnings play again on the 30th after hours, okay? And FLR let me just bring it up. FLR got completely and utterly beat up. And you can see right there, it was just moving down, 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 down. So this showed up on the 5-day bounce, okay? And if I sorted a daily chart, you would see that it was down 5 days and now it's looking for a bounce. But what I'm really trying to point out here is this.
Wow.
Here was the alert at 1667, all right? Now, notice where the AI got out, 1759, right up here, okay? Now, why did it get out? It's a timed exit. Each one of these strategies has a hold period. It's been optimized for a certain hold period. In this case, I believe it's a 90-minute hold. That does not mean that you had to get out. Like, why would you get out of this trade if you got in anywhere near the 1667 and it was up here? Like, maybe here you want to take out some. There's a bit of a bottoming tail. But why would you get out certainly everything? It was still working well. And if you didn't, you would still be in this trade. Now we're talking like 7.4%. Like, I'm not saying you couldn't get out some here. And I don't mean necessarily because the AI got out on a timed exit, but maybe on that candle. But, my feeling about the AI, I know a lot of people want to auto trade everything. And my feeling is that
wow.
If you want to auto trade the entry, but I would manage the trade on its own. Yes, this strategy has been optimized for a 90-minute hold, but you have to, in my opinion, treat each individual alert you get from the strategy on its own. If the trade is still working well, why get out? The market was strong today, and if the market had taken a big dive, sure, but the market was strong. You can see right there. There's the pre-market.
Wow.
It was really strong. There it opened. Now it really hasn't done too much, since that first 45 minutes. But the bottom line is, the market's up 250 on the Dow and up 24 on the SPY and all that. So stocks are strong. So why would you get out of this one just because the AI got out on a timed exit? So that's all I'm trying to show you, that I believe that the AI should be, there should be some Man and machine, as we call it. Machine maybe on the entry, but then I would definitely manage it as you see what it's doing in the market. All right, everybody, want to close this down and get back into the trading room. So I will bring back my capture program. So if you have any questions for me, this is the email address you can use. Again, this is the link for our free room. I'll open the room 9 o'clock Monday morning. I hope to see you in the room then. Bye-bye.
Wow.